Okay, so now you have kind of seen how you should sort of start to go about creating your own plan and really how to, follow a system to actually define your own sort of, trading, your own unique trading personality, tailoring that to actually your own current lifestyle and your trading goals. But I know when trying to do something from scratch, especially for the first time or, with a completely sort of brand new strategy, it can be quite daunting to do that. So just thought it'd be quite useful for you guys to kind of put together a beginner trading system. And by beginner, I don't necessarily mean that in terms of difficulty level. What I mean more is just that it's a beginning or a starting point for you to take as a plan, but then to take that and mold it into your own, right? So you can basically just use it as an example of kind of what a basic plan can kind of look like. And then, yeah, you definitely need to take that, follow that process that we've just gone through in the previous lesson. And of course, you will build that, evolve it, and mold it into something of your own as you gain experience testing and trading it eventually in the live markets. So first, you need to decide what process and system you're going to follow for mapping out your charts. So this is just essentially your overall process for how you're going to analyze price. So obviously we start with that top-down approach. In this case, we're going to start with the weekly and the daily time frame because it's these time frames that are going to give us our higher time frame perspective to see whether the 4-hour trend is kind of likely to turn around or potentially reverse. So we're going to map out the current daily and weekly swing ranges. So that's really simple. You're just mapping out the swing high and the swing low on each of those timeframes. And then of course, also drawing on any relevant supply and demand zones. So you don't want to be going on there and, drawing on every single historical zone like we have been when we've been practicing. Instead, when you're doing this in a live market, you want to keep your charts as clean and free of clutter as possible so that we can actually focus on, the relevant price action. It just makes it a lot easier to see what's going on. So just draw on the zones that help you build the current story of price, up into the point that we're in now in the market. And then of course, draw on any fresh zones near the current price action that you will be looking to potentially trade around. Then once we've mapped out the weekly and the daily, we then drop down to the 4-hour chart and pretty much follow the exact same process. So we're going to be mapping out the current swing range that price is within, the premium and the discount of that range, and then as well as any relevant supply and demand zones. So we're using the 4-hour time frame to give us kind of the overall narrative of price. Now, what does that mean, narrative of price? Well, essentially, it's to understand if we, are we currently playing the 4-hour continuation or are we playing a 4-hour pullback, right? So that way we know sort of how aggressive or conservative we can be with entries and management, kind of, how far to try and push that. So then we can drop down to the M15, which is our medium time frame. And this kind of gives us our immediate bias for the trading day or kind of for that session. And we use this to confirm the 4-hour turning points as well. So kind of, confirming if the 4-hour is about to start a pullback or if, say, the higher low in a bullish trend or a lower high in a bearish trend, whether that may be forming and the next 4-hour continuation run is about to start. Right, and we do this by following the exact same process of mapping out the current M15 swing range, so the high and the low, and then we use that to draw the premium and discount of that range, and of course, as well as any relevant supply and demand zones. Now, I haven't actually listed here on the slide, but of course, during this entire mapping process, you can be marking out any relevant liquidity on your charts too, on each time frame that you use. So that's liquidity that has been swept, and also any pools of liquidity that are sitting there that you think may be swept in the future. So then once price has reached the M15 or the 4-hour POI, you can then drop down to your execution time frame. So in this case, the M1 time frame, and then you wait for your entry model to set up, execute the trade if that setup arises, and then you follow your management plan. So essentially with this method, if you're kind of to very crudely simplify it, what you're trying to do is you're essentially primarily using the 4-hour chart for kind of mapping out your key swing structure. You're then using the M15 for identifying points of interest. So that just means that the zones that you want to trade from. And then you are using the M1 to execute trades within those POIs. So once price has kind of reached those M15 POIs, you then drop down to your execution time frame to then look for your entry model. So essentially what you are doing is you are focusing on the 4-hour trend and you're trying to play all of the continuations all the way towards that next 4-hour zone, and you can use the M15 POIs to do this, with M1 execution. So for instance, let's say that the 4-hour chart was bullish and it's trending to the upside. So long plays, they're going to be the high probability positions, right? Because they are pro the 4-hour trend. And of course, you can look to catch the 4-hour higher lows from those 4-hour demand zones, right? But you don't just have to wait for 4-hour POIs to enter price. You don't have to wait for price to only be in 4-hour zones, because what you can do is you can trade that whole 4-hour leg using the M15 POIs as they form as the 4-hour is trending right to the upside. And of course, you can play the 4-hour pullback just in the exact same way, looking for those M15 supply zones as the 4-hour is pulling back. So all of that there is essentially our mapping framework of how we would be viewing price action with this system. Now, you can have this written down in your plan. You don't have to, do it if it's useful, put in more detail here, whatever. But this is kind of just to get you thinking of kind of just how the system works, and kind of what you will be doing from a process side of things when you're actually analyzing and looking at the charts each and every day. So now what we can do is look at kind of more what your kind of actual plan is for trading that analytical framework that we've just gone through. So the first bit we need to look at is how we choose to select a higher time frame POI for us to build a trade idea around that POI, right? Around that point of interest. So you would look for a zone that is visible on at least the M15 time frame or higher. So it could be a zone on the M15, it could be on the M30, it could be on the 1 hour, the 4 hour, or a daily zone, for example. But M15 is the lowest you will go for finding and selecting those higher time frame POIs. Now, you may want to define that in a situation where, say, you are using a 4-hour zone for your higher time frame POI, you need to ask yourself, do you have to refine that 4-hour POI down to an M15 zone that is nested within it, so that you make the POI smaller and more accurate, so that when price first taps into the 4-hour POI, you are still sitting on your hands and waiting actually for price to push further into the 4-hour zone to then hit the refined M15 zone within it, before you even begin to look on the execution time frame on the M1 for your entry model to execute. Right? So you want to kind of have that in your plan if you're happy to trade once price hits a 4-hour POI, or if you're someone who actually wants to wait for the refined zone within the 4-hour zone, right? So you're looking for price to hit the M15 zone within the 4-hour zone. Or maybe you're not that bothered about that, and actually you're happy to just start looking for your entry model on the M1 time frame as soon as price reaches the 4-hour zone. So you don't actually refine the zone any lower than that. And you're happy to get involved as soon as price just hits the 4-hour zone and your M1 entry model sets up. So if you're going to have a refinement rule like that, where you do want to refine it, just make sure you kind of put that in here, somewhere around here. Now, the next criteria is that your POI, your higher time frame POI, is drawn on a sell to buy or a buy to sell that is then engulfed. So you must specify here whether you will use one pivot candle, or maybe 2 pivot candles, of course, if there are multiple candles, or if you will take the entire buy to sell or sell to buy range, or maybe you're just happy to use a little bit of discretion and you can kind of use all of those methods, and you will just pick and choose as you see fit on a case by case basis. So me personally, at the moment, at this time of recording, I kind of use a little bit of discretion here, and I would either use a range or I'll refine it to a candle, kind of just based on kind of what makes most sense to me. But when you're first starting out, or just even in general, some people will benefit from being very kind of mechanical here, and they won't take the entire range, and they will be patient, and they will only wait for price to hit the refined candle. So they will draw their zone on kind of that last sell to buy candle rather than the entire range. Okay. Then sort of the next thing we're going to look at, of course, is that it should be a structure or a flip zone that caused the change of character or a break of structure, right? They're the only valid zones that we're interested in because those are the strongest zones. Also, another thing you may want to consider is that a sweep zone, did it take liquidity when it was created? Now, some of you may want to have this as a strict criteria for your POI to be valid. Others of you may not, and you may only use sweep zones as extra confluence because you don't have to have it. But just make sure you clearly define whether sweeping liquidity is a strict criteria or if it's just added confluence that's kind of nice to have for you. Inducement. So is there liquidity to be swept in front of your POI? And again, define whether this is a strict requirement that it must have, or if it's just an additional confluence for you. And then finally, is the demand zone in the discount or is the supply zone in the premium, right? Do you have to see that? So define whether this is a strict requirement that it must have. So that would mean, you can only buy from demand zones in the discount. So if you saw an M15 demand zone, but it was in the M15 premium, so the top half of the range, then this would mean that it is not a valid area to trade long for you. Or, maybe premium and discount, it's just a nice confluence to have for you, but it's not a strict requirement. Just make sure that you make that clear here in your plan. So that's a pretty solid way to refine and select your higher time frame POIs that you are happy to look to build trade ideas around and to trade from. Then once you've established, such a zone on your chart and you've set your alert for when price reaches that higher time frame POI, once your alert goes off because price has got there, now you need to follow your lower time frame execution entry model. So liquidation. Again, very simple. You just want to see liquidity get swept as price moves in to your higher time frame POI, but you can see this on your execution time frame, right? So let's say you're looking at your M15 POI and then you've dropped down to the M1 as price is approaching the M15 POI and you see the M1 set up some nice equals and then those equals get swept into the M15 zone. That's essentially what I mean by liquidation, right? So it's liquidation on your lower time frame execution. So on your execution time frame, I mean. Then of course, once we've seen that liquidation, then the higher time frame POI, it needs to be mitigated, right? We want to trade the M1 entry model only if the actual M15 zone has been hit, right, or higher, right? That higher time frame POI must be mitigated. So then those orders are now being filled, and then we want to see quite an aggressive reaction on the M1 time frame, so that tells us and confirms to us that those large orders are actually in that higher time frame POI. And as they are being filled, we're confirming that overwhelming imbalance between supply and demand because we are seeing that aggressive move in and then aggressively moving back out, which essentially looks like a V shape, right? This then leads to a change of character where we see that first initial sign of a lower low after hitting a supply zone or a higher high after hitting a demand zone. We then look for the flip zone that caused the change of character. So we need to see where that interaction took place. So where either supply flipped to demand or demand flipped to supply, that then led to that shock, to that change of character. So remember, this is the higher probability way of using flip zones because you are waiting for both the flip and the choke rather than just the flip on its own and entering before a change of character, right? So we want to see a flip and a choke. However, sometimes there may not be a visible flip, but there is a very clear reaction from your higher time frame POI that then does lead to a change of character or a break of structure. So in this case, what you can do, if there's no flip zone, you can look to use the extreme structure zone instead, and you could look to enter on that. And now you have seen everything you need to see, so you can set your limits on the distal of the zone, or maybe you always use the EQ, or maybe your entry is determined by your fixed stop loss size. And of course, you always place your stop behind the zone. So in this bit here, just make sure that you define exactly which of those three options you are going to use for your entry, just so that you can be consistent and enter the same way every time. Now make sure that you've watched the lesson on entries in the technical analysis module if you have not done so already, because we speak about this in a lot of depth. Okay, so that essentially is how you select and refine your higher time frame POIs to look to trade from, and then of course the entry model that you look for to set up once price has reached that higher time frame POI, and it has of course mitigated it. So now you are in a live position. How do you actually manage it? Well, the first thing to consider is how are you going to remove your initial trade risk in an effective way? Are you going to use a fixed R method, such as always taking 20% partial volume at 4R running profit? Or maybe you're going to use a technical target and you're going to trail your stop loss to break even at the first M1 break of structure, or something similar like that. Just make sure you clearly define what you're going to do here to remove your risk, and it's just essentially break even your position. Now for managing the rest of your trade, you may want to have slightly different options depending on whether you are trading pro or counter trend. So for example, let's say you're trading with the M15 and or the 4-hour trend, then you may want to target the next week swing high or low. But if you're trading counter trend, then you may want to be much more aggressive and target the next M15 S&D zone, for example. Or maybe there'll be occasions where price is literally just stuck in a range and you're essentially just playing ping pong. So you are buying at the bottom of the range and you are targeting the top extreme, and vice versa. So you'll be selling from the top of the range and you can look to target the extreme bottom of that range. So that's quite a kind of simplified and reasonably mechanical approach to management. Of course, just use this entire plan as a very rough starting point, and then you can come up with your own ideas from here. But finally, we need to make sure that we list our risk management within our plan. So define a maximum loss per day. I think 3 losses well, it's definitely an absolute maximum, which I personally think at that point you just need to shut down your computer for the day, go and take a walk, because it's very likely that things will quickly spiral out of control from there on. So, just come back another day with a fresh mind, on a fresh slate, and a rule like this is really here to protect you from yourself. The market isn't going anywhere, and it will be there for you tomorrow. Of course, unless it's a weekend, but that's a good time to just, join your trades, see what's going wrong, if you've made any mistakes, and then hit the next week with a fresh mind. And then, of course, position sizing. So risk 0.5% per trade, for example, and just make sure you keep that fixed due to random distribution. Minimum stop loss size. So let's say for a pair like euro dollar, if you are executing and entering on the M1 time frame, I wouldn't recommend, well, regardless of what time frame you go on, I would not recommend going lower than 2 pips when you are first starting out. 2 pips is pretty ridiculous as it is. So at this stage, do not worry about trying to refine any more than that just yet. Then you may want to list what pair or which pairs you trade if you do trade more than one. You might think this is a little bit of an odd thing to bother to put on your plan, but you would honestly be so surprised at just the amount of people who maybe they don't see many setups that day or that session like they would like to see on their usual pair or the pairs that they normally trade for the day. They haven't taken a trade, so they get bored, and they feel the need that they must be in a trade in order to be called a trader, right? So they just fire up a chart of another pair that's not in their plan, that they haven't extensively tested and collected data on, and they just start firing into trades on that pair. That's what gambling dickheads do, right? So yeah, don't be a dickhead and just define ahead of time what your pair or your pairs are. And then finally, session timing. So you may want to define what hours you will actively trade. This can be a little bit more relevant to those who are looking to enter on the intraday timeframes, as you will find the best setups, they are usually around the start of the London session and the start of New York. So those are the times there based on the London time zone, so 7 till 10 a.m. and 12 till 3 p.m. That's pretty much the London and the New York session for those who base that on the London time. I'll chuck a link below just so you can compare that with a world clock. So essentially, kind of putting in these fixed hours, this can just really help you to actually get away from your screen during the day. And you'd be surprised, but you need to make sure that you are eating, you're not skipping meals, and you actually do take a break, go for a walk or whatever, and you're not just glued to the screen, because it's just not healthy. And I can guarantee it will have a negative effect on your trading long term if you don't do this. If you don't enforce some kind of routine like this on yourself. So yeah, that kind of wraps up a very sort of simplified trading plan there. There is obviously a lot more to it behind each of those steps, but I find that this is quite a good way of summarizing all of those processes and steps in your strategy. So that at a quick glance, you can scan through this every single day before you trade and during your trading session. And when you are just about to consider entering a trade, you can quickly just go through this and tick off all of these, all of the things that meet all of your minimum criteria, and then potentially ones that are just added confluence. Now, what I would also recommend is that you add a diagram and or a screenshot of a trade example, or of course, multiple examples, just so that you can quickly look at them as well, and your subconscious knows exactly what it is you are waiting for to set up to execute, and that can really kind of help with patience and avoiding FOMO and avoiding jumping into shitty trades that just quite honestly are not a part of your trade plan. Right. Now what we're going to do is we're going to hop on the charts and go through this on an entry model diagram, hopefully just to make this even clearer. Okay, so let's apply that sort of beginner trading system to our very trusted and infamous price action model that we've been looking at pretty much throughout the entire course so far. So what I've done over here on the right hand side is essentially just put some text here, just an even more, I guess, simplified version of the plan that we've just gone through, with essentially just a few keywords for each line here. Now what you could do, something I would also recommend, or even when you're testing and when you're in the live market, is potentially having something like this on your charts. If you are going to do it, use the anchored text. So if I show you over here on the left hand side, if you click on the text box, and then if you use anchored text, essentially all that will do is it will mean that the text will stay there rather than it moving like that as I'm scrolling here, right? So yeah, it just can be pretty useful. You don't necessarily have to have all of this written out or however long your plan is. You could literally just have maybe the lower time frame execution or just whatever you find relevant, just to kind of, yeah, just to keep at the forefront of your mind as you're looking at the live charts for, you know, all of the obvious reasons that we've discussed before. So what I'm essentially kind of my goal here to do is essentially just go through a few sort of areas within this price action model of where we could look to enter trades using this plan, and kind of how how I would approach that. So let's kind of look at the kind of the clearest example over here, where we essentially have the bullish 4-hour trend that we are within. So we're within the 4-hour high and the 4-hour low, right? We're looking to catch that 4-hour high or low. We have come down and mitigated our 4-hour demand zone, the M15. This blue line has now switched bullish, right? So we are now trading in line with the M15 and in line with the 4-hour. They are both pro trend now. So now what we have, we're essentially looking to catch that M15 high low, right? To catch the 4-hour high low as well, to then trade that next move up to form that 4-hour high, right? So if we were kind of at that point, what we would do is we would kind of use this to confirm our higher time frame POI that we are looking at, to make sure that it's valid. So in this case, if we were looking at this zone here, right, to see is this a zone that is valid that we want to build our trade idea around, to then look for our execution entry model. So what's the first thing? Well, it needs to be at least on the M15 or higher. So in this case, right, our medium term time frame can be the M15, right, the blue line. Lower time frame, say, is the M1. Higher time frame in this case can be the 4-hour, right? So in this case, is it greater than M15? Yes, obviously that's our M15 time frame. Is it an engulfed sell to buy or buy to sell? Well, obviously we're not using a candle chart here. It's just a line annotation chart, right? So, I don't know if, I can't say for certain that it's an engulfed sell to buy candle to show you, but obviously you can imagine what that would look like on the charts. Now, this is where I was saying before, you don't have to do this, but to kind of try and remove as much discretion as possible and try and make it very mechanical, I would define here whether you are going to be the trader that will be happy to use the entire sell to buy or buy to sell range, or if you are going to refine that down to the single candle, the pivot, or even a fractal wick refinement. And if you are going to use kind of multiple options, so sometimes you'll use a range, sometimes you'll use a candle or multiple candles, or sometimes you'll use just the wick. Try and define kind of when you will do that. You don't have to. You can use a little bit of discretion for what looks best to you, but I would try and kind of, like I said, be as mechanical as possible. So obviously if you're kind of just taking one candle, it would probably look something like this. But if you were taking the entire range, then you would, or that would kind of be the pivot, right? That's kind of like the last sell to buy before the high breaks, or technically that's really the whole M15 pullback there, and that would be the whole range, right? Which is obviously more than valid. So then as soon as price comes into that range, you're then waiting for your entry model to set up, or you don't care if the entry model sets up at the top here. You're waiting for price to actually hit this, your refined zone, to that candle, that pivot candle, or that fractal refinement before you were going to look for your entry model. So that's essentially what that second line kind of means there. So yeah, so far we've kind of hit those first two lines. So what's the second one? Is there a zone that caused a change of character or a break of structure? Well, in this case, right, we were obviously bearish in M15. We then got that first sign of a higher high. We got that change of character. So yes, it did cause that. Did it sweep liquidity? Yes, it took the liquidity below this low here. Now, for some of you, this will be a strict requirement. Others of you, it will just be a confluence. Does it have inducement? In this case, on the M1, we can see here we have those equal lows above the zone. So yes, it does have inducement in that case. And then premium and discount, well, if we were to put on the range on this M15 leg from the low to the high, we can see that it is in a discount. Right, and again, that will be dependent on you personally, whether that is just nice confluence, or if you only will look for longs if it is in a discount, right, and if it has to be a strict criteria. So that's essentially how we can, sort of confirm and choose our POIs for selection. So once we, have that happy, we can set an alert on our zone. So, remember over here, you can click that plus button, and then that would how you can add an alert for price when it then taps into your POI. So once it taps into there, we're now looking for our lower time frame execution, right? So what do we have? Liquidation. Yes, we've liquidated those equal lows. Mitigation. Yes, we've come in and mitigated our zone. We then want to see that aggressive move out of that zone, that kind of V-shape reversal, right? Then what do we want to see? We want to see change of character, because we actually want to see that the M1 is making that first high, which is what we got here, right? We get that change of character. So then we want to look, was there a flip that led to that change of character? Yes, we can see that there was, because if you just grab the paintbrush, what happened? Price came into that supply zone. The supply zone tried to make a lower low. It failed to do so because it failed to take out this low. Then demand stepped in, and that led to this reaction failing. Remember, we want to see what the reaction point is. The reaction then failed. So as soon as we break up above, get rid of these lines. As soon as we break up above that dotted line, that means that demand has now flipped, right? Supply has flipped to demand. Demand is now in control. But then we also get the change of character. So we get the chock and the flip, right? That's even more higher probability. And now we are ready to look to enter and set our entry order. So where are you going to set it? Are you going to set it on the distal, the EQ? Is it going to be dependent on, if you have a fixed stop loss, right? Just try and make sure you kind of make that as mechanical as possible and try and do it a consistent way every time. For this example, I've just said put it on the distal, kind of as well, just because I recommended to you guys, when you're first starting out, it's probably better just to take the distal, simply because you'll be entered into more trades, right? And that's just going to speed up your learning progression, just as you're getting into more trades, getting more experience, etc., etc. Yes, it won't be as refined and you won't get as high risk reward for getting in on the EQ, for example, but I just think it's good at the start to potentially, get a bit more experience and being in more trades. And yeah, that pretty much leads us up now into you being triggered into the trade, ideally. Another thing that I haven't actually listed in here, and I didn't list it on the previous keynote, was whether or not you kind of want inducement before your entry as well, which is another line that you could add in here. So chock, flip, then you may want a line that says inducement again, right, for your execution, and then you can set your entry order, right? That again will depend on whether that is just confluence or a strict requirement that you need to see. So once you're in a trade, this is where we can use a combination of both the fixed R method and both technical targets. So in this case, we're going to use fixed R to actually move our trade to break even. So let's say this is how we size the trade up. Then what we would do is work out where 4R is, and then basically we would partial out 20% of our volume if price gets to here, so that we are then net break even if price was to come down and stop us out. Then with our remaining 80% of volume, if we are pro trend, well, in this case, we're pro the M15 and the 4-hour, so we're definitely pro trend, right? We can target the next M15 week high, which would be that high there, right? Where you could partial out some volume, or you can also target the 4-hour swing high. So I haven't gone into a lot of detail on this line. I've kind of tried to keep it very, very simple. Kind of two things there. One is, what is pro trend for you? So you might want to be very specific on what that means. Does that mean the 4-hour chart, or does it mean the 15-minute chart, or does it mean both of them? And are you going to have different management rules for if it's pro 4-hour but counter M15, and when it's pro both of them? Right, so you can see how it can get quite confusing, and that can be a lot of different variables here. So that's kind of why I try to keep it reasonably simple. And the way I kind of generally approach it is just be very simple, right? 20% off at 4R, and then kind of allow yourself a little bit of discretion for how you're going to partial out that remaining volume with, how much confidence that you have that you want to kind of swing this up to the 4-hour high, or, if you just want to target this M15 high, because something else you have to bear in mind is if you are entering down here, which is really near that higher time frame low, that 4-hour low, right? Then if you're in this trade, it's pretty likely, or at least you have a much higher probability that if price goes up and it could come back down, that ideally you probably will be protected and price won't come that low, and it should eventually take out that 4-hour high, compared to if you were entering, say, an entry model all the way up here. You might want to be a bit more aggressive with your management, because although you are still pro 4-hour and the M15 trend entering up here, and at that point you're entering much higher in the range, you're buying in more of a premium, and price could still just tag you in, and then it could go down a little bit lower before it goes. So although this trade up here is both pro 4-hour and M15, and this trade here is both technically 4-hour and M15, they're both very different trades in terms of where you are entering within the range, right? Now, you can't have pages and pages of all of these different variables and scenarios for management, right? Because it's going to get super confusing. It's not realistic to be able to read that in a live market. So that's why I kind of just be a little bit loose here. And that's why I said in that lesson on how to make your strategy mechanical, Now, actually, that 70 to 90% is kind of the sweet spot in terms of how mechanical or discretionary your trading strategy is, because I believe kind of having that 20 or 30% bit of discretion is where, situations like this, it's useful. We can decide, actually, I've got a pretty high confidence. I'm entering really low, near the higher time frame low. I think we really can take out that 4-hour high. So therefore, yes, I am going to partial a little bit of profits out as well when we hit this M15 high, but I'm going to leave a decent amount of volume on to target that 4-hour high, right? Whereas if you're entering up here, I'll just drag this down a bit, you might go, well, actually, I'm buying at a premium. There's not that much risk reward left. So actually, I'm going to partial out quite heavily. If there was an M15 high here, and maybe leave like, a tiny bit of volume to try and target that 4-hour high or higher. So yeah, hopefully that kind of makes sense. That pretty much wraps it up in terms of how you would then look to enter sort of trade in this area. So just kind of working your way through, right? We use this criteria to kind of confirm that that's a valid POI for us, and then we drop down to our execution time frame, and we just look for our usual kind of simplified entry model here. And obviously we were pro 4 and 15 trend, so then we can kind of use our management right in that case. So now what I'm going to talk about is kind of this section of price action over here if we were looking to trade from this area. So essentially this is kind of where this sort of bit of text kind of comes into play, which can seem a little bit confusing at first. So let's kind of take this a bit slowly here. So imagine price is coming down into your higher time frame POI. So in this case, this would be our 4-hour POI. So the first thing we need to do before we even think about execution is we need to validate that this is a valid higher time frame POI, right? That we are wanting to look to trade from or build trade ideas around. So what's the first thing? Is it at least the M15 or higher? Yes, it's the 4-hour chart. Is it an engulfed sell to buy to sell range? Well, obviously we don't have the candles, but in this case, we've taken the whole range. Now, if I didn't mention already, this is another thing you may want to do when you're defining how you do this step in your plan, is what you could do is go actually on the higher time frame. So let's say the 4-hour chart, you're always going to take the entire range, right? That range, rather than, the refined candle or pivot. So on the 4-hour chart, you may always take the range, but then on the medium term time frame, the M15, you may always want to be a bit more refined and take the candle. So you could have a combination of both, right? Again, it's getting a little bit confusing here. We have so many different variables, but that may be something that you want to do. Or what you can also do, remember, is once price comes into your 4-hour range, you then may have, I just change this to this. You may want to wait for price to hit that refined M15 zone within it, okay, before you look for entries. That's another thing to consider. So when price comes into here, right, and we validated, so actually I need to continue on this with validation, right? So it's a zone that it's an engulfed sell to buy to sell range. Yes, that's the sell to buy range. Is it the zone that caused a change of character or a break of structure? Yes, it did lead to a break of structure here. In this case, it also was a flip zone, right, because it took out this supply zone here. Does it have, or did it sweep liquidity? Yes, it took out these equal lows. Does it have inducement? Yes, it has this minor swing high just above it. And is it in the premium discount? Yes, it's well below this range, right? So it's fully in the discount. So this higher time frame zone here pretty much ticks all the boxes. It's a great zone to be looking to trade from, right? Of course, it's really near the low as well. So that extreme zone is a great zone. So as price taps into your higher time frame zone, the 4-hour zone in this case, kind of have a couple of options open to you if you're looking for confirmation entries, because of course, risk entry you could technically just enter on the 4-hour zone, right, or on the EQ, but for now we're just going to talk about confirmation entries. So what you can do is the minute that price comes down into your 4-hour zone and your alert goes off, you could just drop down to the M1 time frame, right, and essentially look for your entry model again and start going through this. Look for that liquidation, mitigation, V-shape, chalk flip, right, and then enter, right? So you can do that on the M1 as soon as price enters here. However, it's a little bit risky. Why? Because it's still counter the M15 trend. So the 4-hour chart's bullish. You are looking to get long, so it's in line with the 4-hour chart. But the M15 is bearish at this point, so that is a little bit risky. So this is kind of where I've brought in these rules here. So if we were looking to trade from this higher time frame POI down here, it's pro the 4-hour, right? But the M15 is counter. So that would take us to this line here, right? So it's pro the 4-hour, but it's against the M15. So this is where I've kind of put two suggestions here. If it's a case where it's pro the 4-hour and the counter M15, you can either wait for the M15 to change character first. So no matter what, even though you're pro 4-hour, you're going to wait for the M15 to change character. So you would wait for essentially for this section of price action here, and then you look for this entry model. Or you can take an M1 change of character. So you don't have to wait for the M15 to switch bullish first. You just look for the M1 to change character, but you only do that if price has mitigated, right, the 4-hour POI. right? And the reason why that's important is because if you're looking at price over here, right, and it's around this point here, right, where the orange line ends, and you're looking at the trade plan and going, okay, well, at this point, I want to look for a long. We are pro the 4-hour trend, right, because the 4 hours still bullish. This is the swing low, this is the swing high. So at this point, if you're looking to get long, we are pro the 4-hour trend. But then what are we? We are counter the M15 trend at this point, right, because we're trending to the downside. So that would bring us to this line here. Now, the reason why I've said you need to either wait for an M15 change of character or an M1 change of character has to be in a 4-hour POI, because at this point, if you just look for, you know, that M1 change of character, essentially this entry model here, around here, it's very likely that you're going to take a lot of losses, because say this section here, this price action here, this on the 4-hour chart is obviously a minor pullback, but if we were to drop down on the M15 and look at this, this would look like a very, very decent M15 zone. You know, it led to a break of structure, and then when price comes down into it at this point, you have to ask yourself, okay, we're in an M15 POI, so that's my high time frame POI, that is valid. But now, are you going to straight away jump down to your low time frame execution? Well, yes, it could work, because remember, a 4-hour high low could form from here, and it could go. 4-hour higher lows do not have to touch a 4-hour demand zone to go, remember? So what are you going to do if price comes down to an M15 zone here? Well, this is where these rules really come in handy, just to help you be a little bit more mechanical. Because at this point, you just consult this and you go, okay, well, we're pro the 4-hour, right? We're bullish, but we're still counting the M15. Okay, so what can I do? Well, I can only take an M1 change of character if it's in a 4-hour POI. Well, we're not. We're only in an M15. So straight away, that tells you, don't even look at the M1. Instead, at this point, you have to wait for an M15 change of character, right? You have to wait for an M15 change of character here, or wait for price to enter the 4-hour POI before you can get involved. So you either wait for this high to get taken, right, and then you could buy from wherever that demand zone would form, or you have to sit in your hands, ignore this price action here, and wait for price to come down into the 4-hour POI. Then once price is in the 4-hour POI, okay, get rid of these lines, now you can do your M1 change of character. So down in here, you can look essentially for this entry model. Okay, so hopefully that makes sense. And that's kind of, you know, you don't have to do this. You know, for me personally, my trading with this kind of specific section here, I don't actually at the moment, at this time of recording, have hard and fast rules for this. You know, depending on whether how the M15 and 4-hour trends are. I personally like to use a little bit of discretion here, just kind of how the overall story looks, and I don't have those super strict rules. But I thought this might be useful for some of you guys, especially when you're first starting out, just to make it nice and mechanical, and this can really help to boost your strike rate. Because, you know, like I said, if you have, I think this is just really important to cover, that's why I kind of talking about this a lot, so do bear with me. But, you know, if price is coming down to this M15 zone, it looks great, it's pro the 4-hour trend, but the M15 is still bearish, and then suddenly you jump into the first M1 entry here, yes, they can work out, but it's going to have a higher probability if first you either wait for that M15 change of character, right? You wait for that M15 change of character, so that, or you wait for price to hit the 4-hour POI first, and then you can use the M1, right, to look for your entry. So that can just potentially help you to boost your strike rate. But again, it's just a recommendation. It's not something you have to do. So that's how you can look to trade this area. Some of you may want to be really conservative and just always wait for that M15 change of character, right? Like the very first trade that we went through. So that kind of wraps that up. The only other thing I wanted to kind of talk about is in those counter 4-hour trades, right? So this kind of section here at the top. So let's say we get our 4-hour breaker structure over here. The 4-hour is clearly bullish. And then what do we expect, right? When we're trying to play that pullback, we look for the 4-hour to then mitigate a higher time frame zone. So either a 4-hour, a daily, a weekly, whatever, right? It needs to be a 4-hour or higher zone generally. That price will then look to trade back from. So if the 4 hour is bullish, it's broken structure. At some point, we are expecting that 4-hour pullback, and you're happy to play that pullback. You're happy to play against the 4-hour trend, right? Price then comes into a really nice high time frame supply zone that you like. What are you going to do when price gets into there? Right? Because you could, as soon as price gets into there, just start going through your execution on the M1, right? And you could trade that. But it's quite risky, okay? Because you're trying to trade against the 4-hour bullish trend with the first sort of M1 trend change. Of course, that can work out, and you will get really good at this when you have a bit more experience. But when you're first starting out, you can take a lot of losses if you're just trying to jump on the M1. When the 4-hour is clearly still bullish. Okay, so this can be something that can help you out and can help boost your strike rate a little bit. So at this point, we've come into our 4-hour zone. We really like the zone, but the 4-hour is bullish, so we're counter the 4-hour. Now at this point, if you were to get short, what is it? It's counter the 4-hour and counter the M15. So this would tell you, nope, I cannot trade. I need to sit on my hands, and I first need to wait for an M15 change of character. So what that means is you would sit here, and then as soon as you get that M15 change of character, okay, now I can get involved. Why? Because I'm now counter the 4-hour, but I'm pro the M15, right? Because at this point, the M15 has now switched bearish. So now you were looking to get short in line with the bearish M15 trend. So that's why it's pro M15, but counter the 4-hour. So at that point, you can then do what? You can trade an M1 change of character. Of course, it has to be in your higher time frame POI, right? We're still looking to execute within higher time frame POIs, but at this point, it's pro the M15 because you're looking to short when the M15 has switched bearish, but it's counter the 4-hour chart, right? We're playing the 4-hour pullback. So this tells you now, okay, sweet. As soon as price gets into my M15 POI, I'm allowed to take that M1 change of character, right? That M1, lower time frame execution. And that's essentially, how it helps you to do that. So hopefully that makes sense, kind of the differences there. Something kind of simple like this. You don't have to do it that exact way. Of course, you can come up with something that makes sense to you. But I think this can be a really useful tool, especially when you're starting out, just to help you that, price is extremely bullish. It comes into a supply zone. You like the supply zone. The M1 then, gives you your entry model, sweeps liquidity, get that change of character to the downside. We get the flip zone, we pull back in, you get short, and then price just continues to blast up. And you're thinking, well, why? It was in a supply zone. I got my entry model. Well, yeah, but you're trading against that higher time frame momentum. So, of course, the M1's going to, change trend a lot of the time. And this is where just waiting for that M15 change of character. Once you get it, then you come into the M15. Now you can use your M1 chalk, and that can just help you a lot. But yeah, like I said, as you get more experience, you don't have to wait for M15 changes of character. There will be times where it can make sense to just wait for that M1 setup. But, you need to be a little bit more experienced with that because it's definitely harder to do. So I think that kind of wraps up pretty much everything I want to cover. Again, this kind of goes for all the technical analysis lessons and everything we've gone so far. Like if you just watch this all through in once, this is going to be quite overwhelming, quite confusing. When you're not that used to it, this can seem like like a lot of moving parts of the strategy. And technically you are right, but I promise you, when you spent the time to go through each of these individual components of the strategy, and that's why I ranted about it so much at the start. Make sure you nail market structure before you even think about supply and demand zones. Nail supply and demand zones before you even think about liquidity, right? So on and so forth. And then hopefully when you get to this point, this should be a little bit more kind of easy and fluid on your mind as you start to look at it. But even if it isn't right, it's going to take a little while. It's going to take some time. You just need to put in the work. But also, as you watch the weekly content week in, week out, you're seeing these trades and the trade recaps playing out. You'll just see the same entry models again and again and again. Of course, they'll always look slightly different because price action is always unique. But yeah, as each week goes by, as long as you keep absorbing the content and you keep doing the testing and work yourself, I promise you this will all become second nature. Where literally, you just read those words and you just know what they mean straight away. You don't need to kind of try and grasp this and think about, am I counter, am I pro? You kind of just get a feel for it, and straight away you know how aggressive or how conservative you want to be. I think the only other kind of point I'll make as well is, remember I said you don't really need liquidity or liquidity concepts too much, right? You can literally trade extremely profitably just focusing on market structure and supply and demand zones. So you could literally, especially when you're starting out, just get rid of inducement, get rid of swept liquidity, and don't even worry about that too much. And literally all you're looking for instance, is price to come into your 4-hour zone, then the M15 to then switch bullish, then you have your M15 zone, you wait for the M1 to come into the M15, as soon as it's in the M15, you wait for the M1 to switch bullish, as soon as then the M1 is bullish, then you just look for your entry down here, and you get long. And you try and keep it as simple as that. Obviously there's a little bit more to it with flip zones, etc., but kind of don't worry too much about, did it sweep liquidity, did it take it, is there inducement, blah blah blah. Bring that in a little bit later, because that will just help you just to boost your strike rate a little bit more. Liquidity, in my opinion, it's not the be all and end all, and mainly because it's very, very subjective at times. Like sometimes you'll get perfect, nice equal lows, and when you see that, boom, really high probability, I love it as well. But sometimes, like here, right, say this M1 sweep zone, it can be very subtle whether or not it took liquidity. And sometimes what you might see is price just goes up like this. It has a nice single pullback, and then it goes up like this, and then you're thinking, well, there's no liquidity sweep here, maybe I don't want to take this zone, and then it plays out perfectly, and you missed it. But then if you were to look on maybe the 15-second, well, actually you can see it took liquidity, and then it gets very subjective of whether it was a sweep zone or not. And that's kind of why I would personally say, don't worry too much about liquidity at this point, right? It's something you can bring in a little bit later. So yeah, that pretty much wraps it up. I think okay, final point I'll make is yeah, hopefully I kind of made this clear already, but obviously the way I've been showing you guys with this is kind of really focusing on those three time frames: the 4 hour chart, the M15, and the M1. But really, what's important is just that you have kind of that clear higher time frame, that clear medium time frame, and that clear lower time frame. And that can be anything that you want it to be for you. So, for instance, if you want to be a bit more kind of on a higher time frames, right, because it's just not realistic for you to be on the M1, or you find it a bit hard with your psychology, it's a bit too quick or whatever. Your higher time frame could be the daily, your medium time frame could be the 4 hour, and your execution time frame could be the M15. Or you could even use the M5 for your execution time frame, because that's still kind of intraday day trading, but actually it's just a little bit slower than the M1, and actually it may give you a lot less false signals than the M1. The M5 actually can be a really good execution time frame, something that I've enjoyed trading in the past. But just make sure, of course, those three time frames are they have a decent gap between them that makes sense, right? So you wouldn't just want to use the 4 minute, the 3 minute, and the 2 minute. Hopefully that goes without saying. It's stupid if you do that. Maybe you can make it work. I don't know. But yeah, that's why I think for me, the 4 hour, the M15, and the M1 works really, really well. Or you would do like the daily, the 4 hour, and the M15. So you just need to have those real three key higher time frames, or those key, time frames that you focus on. And then, of course, I don't just look at the 4 hour, the M15, and the M1. I do also have the daily and the weekly in there. They are a part of what I consider to be the higher time frames. But if I could only look at three, it's the 4 hour, the M15, and the M1 that kind of has the majority of my focus. It's the M15 and the 4 hour which I'm really paying attention to structure. And then once I have those zones right and my structure lined up, then that's the last thing I do is jump down to the M1. Or sometimes the seconds time frame, and that's where I look for my execution model. So I'll leave that there before I kind of rant on any longer. Hopefully that makes sense. Make sure you watch this video as many times as you need to. Draw your own diagrams, draw your own entry models. And just make sure it makes sense in your head. Hopefully, you guys have taken some value from this, and this is kind of a useful starting point for you to take away and kind of craft your plan around. Hopefully you'll have some kind of ideas of how you like to trade before you even test this stuff, right? Like I said as well, get rid of liquidity for now if it helps to keep things really simple. That's definitely something I would advise. And then as you start to go test this, we're going to learn in the next module exactly how to do this. Then you start to trade it. You can slowly kind of tweak and change your rules. But yeah, I just know how overwhelming it can be. First things first, right? You understand the benefits of making something unique to you, but yeah, when you're first starting out, you just want someone to kind of hand you that starting point, right? Just so you have something to work with, rather than kind of trying to come up with something from scratch, as I know that can be a bit of frustrating and can waste a bit of time. So yeah, hopefully that makes sense. As always, if you have any questions, don't hesitate to reach out to me or post in the community, or even post a question underneath this video. As obviously posting questions under each of the specific videos that you have a question about, that is going to really help other people that probably are also having the same questions as you, and they can quickly look in the comments below, and it can save them time having to go and ask that same question. So I'll leave that there. Hopefully you guys enjoy that, and I will see you in the next one.